Well, as you know, rates have not been great lately, and they've been trending upwards, and that's really a lot of things going on right now. First and foremost, the jobs report that just came out this week wasn't great. Only 194,000 jobs were created when we were expecting more like 500,000. So that definitely didn't go well. And on top of that, we really haven't decided as a country. They haven't come out to say, are we tapering down around the November 3rd Fed meeting, or are we not? So that's really going to continue to cause inflation scares in general. So overall, not a great week. If you guys are looking at a lock-in, I would likely float the rate for a little bit and see some more clarity in coming weeks.
How long do you think they'd have to, you'd recommend holding off for before locking?
Definitely through the weekend, that's for sure. I'd see what's going on next week. We're hoping Powell comes out before that 1st of November timeframe. November 5th, November 3rd is a lot of dates that they're throwing out there for when they're going to have an answer about tapering or not, but hoping to get something sooner. So it really depends on that. But definitely don't lock today. Wait for next week.
Are they coming to an agreement on the debt ceiling? Do you know?
It was a temporary agreement, and I haven't read too much up on it, but it seemed to fix the scenario very short term, not long term. You need to go back to the drawing table. Now, if someone else is more read up on that portion, by all means, step in. I'm trying to upload a screenshot from our systems.
Yeah, the markets. I mean, we took some massive. I mean, there's been some massive hits. A lot of folks we've been telling lock. There's been some tests in the market, but on the retail side, I mean, it's just this whole week's been bad. Mm-hmm. There hasn't been any like, hey, repricing. Because we go through here on the retail side, we go through repricing maybe 1 to 2 times a day, just to show how tight we try to keep our margins. Mm-hmm. And I mean, we've had nothing but worse. And then you look at the current, like you look at the last 6 months. I mean, there are some resistance, like people that just do stocks and purchases. We broke through multiple barriers last week and this week, and there were some tests this week. It's like, oh, and there it looked like things were looking to go up. It's like, all right, they're looking to compensate, keep, let's get things back up. It didn't happen, and so it just shows there's a lot of people with a lot of money that they're they're looking to invest differently versus mortgage bonds. So that means mortgage bonds, the rates, they're going to go up.
Yeah. Are they thinking sooner than what Powell was saying? Middle next year?
I mean, I'm not the guru, but going by the way, like everything I'm saying with what we've seen with where we broke 2 resistance barriers in the last 2 weeks, and the markets didn't adjust. Yes, I do. So I see the rates. Next year, January, I mean, the best rate may be in the 4% range at this point, unless you're looking at spending a lot in points. I mean, just people are, so that's what I'm saying. I mean, you look at, there was such a huge hit we've had in the last few weeks. Because we had, you look at like middle of August, everything was just, the markets are up one day, down, up, down, just doing that. Sorry, I had a photo. Actually, hold on, I might be able to, hold on.
We can see you.
Let me, so I'm not tech savvy here.
Oh,
but I mean, this is like last month. And if you guys see that massive red drop,
yep.
I mean, that was a huge market hit, and that broke major barriers. And then you saw there's a little up. It's like we had a little up. It's like, okay, we're thinking the markets are, like people are like, oh, let's don't stress. It's not a big deal. Everything's fine. But then you look what happened right after that. And then they broke, you see that green line, they broke a resistance barrier again. That's a huge warning sign. Just in general for people, if they don't know the tick marks or any of those things, or the markets, stuff when you break, like they broke a barrier here, this red line, when we had that huge drop, that was huge. That was like, okay, this is scary. Now, are they going to bounce back? Are they going to play in this market, this green and red market? Are they just going to bounce and play in this market? Well, you could see they tested it. Then they went back up and they broke through it. But then you look what just happened. And they broke through it multiple times. When a market breaks through multiple times, or just in general, like if you're doing stocks or currencies or any of those, when you see something like this, that's a huge worry. That means that there's people that have a lot of money that know more than we do.
Yep.
And they're hedging.
Yep.
So, and that's what we're seeing, right? Sorry, I know this is very,
The screenshot I just added is the same system Steve is showing. It's just the month view Steve's got on the quarterly view. So it'll still show the same resistance if you guys are tracking.
Yeah, it's when you see that, you hedge. I would definitely hedge. Whatever your financial investments are, you definitely.
What is that? What chart is that?
That's the mortgage bonds. The 30-year.
Okay.
I could look at stock. I mean, stocks have been taking a hit, but I know the market took almost a 30 point, or what we'd call bips, 30 bip hit today, and they took it yesterday. I mean, unless you're looking at something long term, and even then, I wouldn't, like if you're doing investment projects, I would definitely budget a higher rate, personally, myself. Just be safe.
Maybe
so like flips, investment flips. You want to buy something and you're like, oh, I'll buy this using private money, and I'm gonna flip it and look at doing like a retail refi, get in the low threes. Because I mean, we were doing some investment refis, low threes. We even, I mean, forget the 5% market. We're doing low threes. But right now I'm not seeing.
What are you seeing now in the fours?
I'm seeing fours. I mean, unless you're looking at points. So that's something in investor flip wise, or the bird moment, you're going to want to.
You might have to readjust the numbers, right? Like for your exit.
Actually,
that expense.
I ran a scenario for investment property last night, and it came back wanting the rate about 4.625, and even then it was about half a point. For that one, I was able to get them down to 3.99, but that was still a point that they were looking at paying. So it's getting more expensive in the investments currently, and those are typically the first to go as far as investors, how much they're willing to pay and how much they're willing to risk on different rates.
Right.
These are the flip and holds, or well, I shouldn't say flip, purchase, rehab, however you want to do it. You want to buy it, private money, and then you want to flip it to retail. There's no, I'm not seeing 3.5 anymore on the investment. It's all in the fours.
That's really good to know. Because like right now we're in the fours, roughly, we fall in there. But it's probably going to go up for us too then. Yep.
A lot of volatility in the next few weeks. Hopefully Powell comes out with something else that helps this. But
when is he supposed to speak again?
He keeps throwing around November 3rd or November 5th. So those are kind of the dates that people are looking at, but we don't know for sure. Could be any day.
Yeah.
Wait, October or?
November.
No, yours, yeah, the November ones, yeah.
Yeah.
So so it's interesting. I mean, if you're looking at buying and just flipping quick, I mean, I don't think that really changes too much, but if you're looking at long-term, or you're looking at long-term rehab, construction loans, things of that nature, you're going to be paying more.
I think developers will be like, really have to watch out, like that's you're most exposed when you're doing development, because it's like it takes longer, right? And then also you're sitting on land, or typically, until you're ready to go vertical. But
Yeah.
I think even for fix and flip guys who are doing fix and flip short term, you might want to, because like if you get into a project, even though you plan on 6 months or 4 months, it's if the rates move quick, then it might affect your exit, right? How long you sit on the market. Maybe you are using like comparables probably for your ARVs before the interest rates started to, are starting to get very volatile and are going up. Then prices might go down, probably not that fast. So maybe fix and flip, you're not as exposed, but I would just count on it just in case. We always want to be more conservative, right?
Yeah.
So,
well, we're also on I mean, I have a borrower right now. He was doing a cash out, buying a property in Texas outright. The appraisal was waived last month. And he paused, and he was stupid. He paused, and then he called me back. He's like, hey, you know what? I want to go, continue ahead. It's like, all right, let's make this happen. Well, now he needs an appraisal, and the appraisals are like 3 weeks out.
Yeah.
And he could have had a waived appraisal.
Oh no.
And now he's having to pay for it, and now it's going to take forever to make that happen. But the issue was, it just shows like Fannie and Freddie Mac have downgraded what they think the estimated appraisal values are for properties. Because they, within I would say maybe a 3-week time period, Fannie Mae and Freddie Mac are now, it's like what they thought properties were worth, where they would waive an appraisal, they've now lowered that dramatically. So that's something that that could be you'll probably, or you and Kiko probably have better tools. But that's a definite concern. It's like, all right, they're now saying, it's like, we don't think these properties are worth that anymore. And that was like 3 weeks ago.
No, I see a problem with appraisals right now. One, I mean, they're in short supply. There's not many of them. And two, it's such a moving target right now. And I guess they have to, do their values based on recent comps. But I'm seeing a lot of companies in the hard money space trying to move out of the appraisal process because it's getting so expensive, it's taking so long, which would be great for, us, who are borrowing, because it's like, if we don't have to get an appraisal, maybe we can get a BPO or something. Like that's huge. We can close quicker. The appraisal is the biggest hurdle for us, even in the hard money space. So, but it could be give and take, right? They're thinking about switching to desktop appraisals, but if we go that route, then sometimes, like the desktop appraisal just can kill a deal, right? So,
yeah. So that's what we're seeing. We're seeing more or digital underwriting is what we call it. Yeah, that is the appraisal waivers on that's dropped dramatically. So it's like evidently the Fannie and Freddie Mac, which they're the main ones that buy all the mortgage bonds and things, they throw a lot of money around. They're seeing the housing is dropping, or the value of housing is dropping. So that's the one. So I'd say that'd be probably the big thing for us to be a little concerned on.
Yeah. I got something.
Anyway.
Well, thanks, Steve. Thanks, Matt. Always great to hear from you guys. But let's go into our leads, needs, and good deeds. If anybody has anything, I'll start it off. So, but please drop something in the chat or feel free to unmute and let's talk about it. Today's kind of just roundtable discussion. And I want to start off by putting it out there. Does anybody have any contacts within like Zillow or Redfin, or some of these online platforms? Because I'd like to bring somebody on to talk about what they're seeing, you know, because they have all the data. They hold all the data, right? So
We could do their headquarters is here in Seattle, so we could do like a Zoom walkthrough or something
I'd
like that
to,
with someone there.
yeah, I want to see like someone like a data analyst from like one of these online, you know, behemoth platforms. What was it? Zillow, maybe even auction.com. We had that guy on NPLA and it was very interesting to see. We also had someone from Zillow, I believe, right when like maybe a year ago, and it was clear that you see people moving out of, you know, certain markets and into certain markets, and that's a huge advantage for people who are trying to, you know, get into appreciating markets, and investing in, you know, out of state or out of area. So if anybody knows anybody, you know, we'd love to bring somebody on to have a quick talk story session with them, and we'll come with questions. So does anybody else have anything they want to put out to the group?
Congratulations to you for closing on one of your Makaha projects today.
Oh, thank you.
That was
Thank you.
brutal.
Yeah. Oh, did we actually close?
We did. We recorded. Congratulations.
Okay, thanks. Well, thank you for helping us navigate that one. We're
Awesome.
almost there. We're sitting on we're waiting on permits. I might be a week away. I had a good call with my architect yesterday. So everybody, if I can get everybody's prayers that I get my permits, that's going to be exciting.
Awesome.
You should probably go into how long those permits took. And even though you have a runner, and these were, I mean, over a year, yeah, you were waiting on some of these permits. For anyone who's looking to do any development or CPR projects or anything with, you know, heavy permitting, you should, you know, dive into a little bit of what you were experiencing this last year. I know that some people would really like to know, at what point in Hawaii do you find it necessary that you like to pull permits? What kind of permits?
Sorry, guys. I guess my internet's kind of acting up, so I missed some of that.
I was just saying, maybe at some point today you can go into like your experience of permitting. You know, you got a lot of developments and CPRs. A lot of people were looking, at least in Hawaii, when they want to build or develop, they're kind of wondering how big of a project they can handle, what's their holding cost when it comes to permitting and stuff. You know, I know some people on here might have some questions around that, and I know Keone's on here, and I don't know if Richie is, and maybe Daniel, any of the others that are doing it in Hawaii, your experiences with permitting. And then, you know, everyone kind of knows in Hawaii, you kind of pick and choose when and how you pull permits. So are you just going to pull a demo permit? So you got the blue tape around.
Well, I mean, like, yeah, that could be a whole discussion for sure, the permitting process. But the thing is that, yeah, like every county is different, right? And I think from what I hear, most people are frustrated with their county's permit system. But Hawaii, I think, takes the cake. I mean, it is, it can be a nightmare sometimes. But for us, like nowadays, if we're doing ground up construction, for sure, we'll do, we'll pull permits early, and we'll start that process right from the start. If it's a renovation project, we'll start it. It depends on the project. If it needs a lot of structural work, then we will absolutely start the permit process at the beginning of the deal when we buy it. If it's stuff that like it's not so structural, there's no damage to the major systems, then we will, we might decide to just roll the dice and charge forward without permits. And usually we might get a call from an inspector saying, asking us where our permits are. And if we tell them, well, we don't have any, we're just renovating the house. And they might tell us to stop work. And if it doesn't stop work, we got to stop work. You want to keep them happy. You know, they hold your life in your hands, basically. So, but at the same time, it's risk and reward, right? We're, as an investor and entrepreneur, like all of our decisions, if we're making calculated decisions, should come down to what's my risk and what's my return. And so trying to balance that, you know, because otherwise, you know, technically, like if you spend, I think it was over $1,000 on your property, on your own property, then you're required to, in the city of Honolulu, to pull a permit for that. But if you pull permits for like $1,000 job, like they don't like that either. You know, the guys in the city don't like that either, because it's just another file on their desk and it's for $1,000, and they're like, come on. But even though you're trying to play by the rules, right? So that's why it's like there's no real system that I see that is, obviously it's not working. So something needs to happen. You know, in different counties across the, you know, the country is kind of similar. So that I'm seeing, and I think that's one of the main reasons why Hawaii and other markets, major cities, some of them are always in short supply, because developers, there's so much regulation that developers just don't want to roll the dice, you know. So only like in Hawaii, there's us, and that's pretty much it. You know, like we're the ones to take down maybe the 4-house project, the 1-house project here, there. Otherwise, you have to be the D.R. Hortons and the Howard Hughes corporations and the Blackstones to come in and, you know, develop these massive condominiums to provide housing. And a lot of times that housing doesn't go to like local families. So when it comes to like development and gentrification, for the most part, I mean, I feel gentrification and development is it's necessary in certain circumstances, and it's absolutely not necessary in a lot of circumstances. I think.
So funny story. I had the owners of HIC. So they had crazy shirts. I'd unstyle the Horks. Are we paused?
I think Corey's just kind of.
Okay.
I think it's frozen.
When I had the aquarium business back in Hawaii, we had aquariums in the like VP, presidents, you know, all the main offices. And they literally, you remember like the Walmart in Pearl City, before it was the Walmart, they had a lot of that land in that area. It was all like Hawaiian designated and can't touch it, or there's no development. And then they knew probably 5 years beforehand, like it was like they already had everything permitted and set up so they could do a development, they could do a mall, they could plop the Walmart, put the shops, everything all around it. Like when they were heavily developing all the malls, like on all the islands, they knew everything like 5 years beforehand of what was going to be released. That was what I would love to know. I mean, unless it's like, you know, just massive insight and good connections, like what was giving them the access that we're not able to touch.
Money.
Money.
Always all the cash money. You can get whatever you want.
Right. Yeah.
In Haleiwa, I bought my first house in Haleiwa in the town by Matsumoto Shave Ice, in the big church. If anyone has been to North Shore in Haleiwa, there's a big church on the corner that has all the ugly cactuses down the wall.
Oh yeah. Uh-huh.
Yeah. So I have a house down on that street, and there's this, I remember all this ag land. So everything used to be ag land. And in fact, when I went and sold that first house, the person I sold it to was another realtor. And she came and I had multiple offers and I couldn't help but choose hers because she had this cover letter. She grew up in that house. And so the first, it was so crazy. When I bought that house, I said it here before, it was the lady next to me who lived there. Her name was Lee. And it was a duplex and it was a single wall construction duplex. So literally you could hear everything. And she was a druggie and she was dating a druggie and he really loved to play his drums in the 600 square foot house right next to my single wall construction, like 2 o'clock in the morning. And it was the only house. There's 3 of them on Oahu, not in Waianae. They were under $500,000 with a yard. And I rescue dogs. So I needed a yard for the dogs. And anyway, she like threw harpoons in the yard and everything and like trying to kill me like every night. And like the freeway was on the other side. I remember just like crying myself to sleep every night. Like, why did I buy here? And I was like, oh yeah, it was the only one I could afford. And I then called the police and like they see the harpoon go in my yard and they're like, we just advise you to move. I'm like, what about arresting her? And I'm like, she's just gonna be back out tomorrow, girl, just move. I'm like, yeah. And anyways, the other guy behind me, he was Bruce, and he was equally as crazy. He was like painting like lines in the middle of the driveway where he wanted you to park like up your fence. So I always say like I had to move away from Bruce Lee. And long story short, the guy across the way, she bought the house because she said back in the day before Joseph Highway was there, that was all ag land. And there was no freeway there and this was all open. And she was showing me where they used to park and where she used to run around as a kid and everything. And I was like, oh my gosh, you're the perfect one to handle Bruce Lee. Like you will have the stamina because of your memory. So it goes to you. And then the guy across the way, he built this really weird looking house. It was really, really thin along the street and long, but he owned all the property behind it. It took him 5 years to rezone that property, to rezone that land. And then eventually did. And at first they only let him, while he was waiting for it to get rezoned, there was a tiny sliver of it that he could build a structure. And so that's why he had this really awkward shaped house down the lot. And then eventually after 5, maybe 7 years, he worked on paying a lot of money to rezone the rest of it and then built this gorgeous house. So
I want to know how he rezoned it because like rezoning is hard, like in Hawaii. So it's almost impossible.
Yeah, that's where, before you paused, Corey, that's what it is. So I've had developers, some, like HIC, a few of the big ones, they already had, like they already knew the future of certain areas and had it planned out, developers, investors, malls. And it's like, how do you, that's where I was curious. It's like, it's just massive money and investment, or?
I think they actually say it's not that hard. It just takes a lot of time because it's bureaucracy. But the people that I heard, like when I talked to him and somebody else I know who went through rezoning, they said, honestly, if you just have the time to hold it, you can do it. Which is unfortunate because if you think back to the historic designation of our land tenure, at least here, I don't know about other markets, but it's always designed with the island's capacity in mind. So, okay, they can withstand this much agricultural land, this much, mixed use, this much apartment, this much single family. The land being at R10 versus R5 was always based off of the capacity of what the natural resources could handle. And now you can pretty much, if you have enough money and if you have enough time, you can rezone anything. You just pay enough. And the land really can't sustain that. So you're taking even redesignations of preservation land. And it's a problem for Hawaii, for sure.
Oh, yeah. No, oh, yeah.
Yeah.
For the traffic. I don't.
Well, yeah, especially traffic. But
oh yeah, no, I'll take Seattle any day.
Well, sorry guys, I don't know what's going on with my internet. I keep cutting out. It must be because we're talking about permits. Something going on, but anyways, permitting is a whole issue, but I think that's it's a big problem when it comes to, it's affecting the housing shortage, I feel. And that's what causes prices to go up amongst any a lot of things. But in development too, it's kind of like you can win big, but you can lose big, right? Like, is anybody following the Evergrande or Evergrande story in China? There's debate whether or not it's gonna bleed into other countries and their economic systems, but I think it has already, just in different ways. So I'm just kind of catching up on a lot of that, but I don't know if anyone has information on that. That's very interesting what was going on there. But it was a massive bubble. They're not the only developer too in China that's kind of been doing this, but I've been hearing about ghost cities in China for years now, about how they just have like thousands of units and buildings that are just empty, cities that are just empty, right? So
that's I've seen them. They develop at incredible rates, and there will be these 20 towers of a couple hundred units each that are just empty for like 15 years. It's crazy.
They're the second largest developer in China. So the fact that the government's saying it's not going to seep into other territories or other parts of the economy, there's no way. If this truly falls, it's going to crash.
Yeah.
The government-backed developments, or are those all private? Because I know in some countries the government has a fair share of their hand in public housing like this. Not public housing.
Yeah, it's a combination. Some are entirely private, some are almost entirely government, and then some are kind of split between. But they're pretty heavily, government's pretty heavily behind a lot of them.
Yeah,
China's put some articles in the chat.
Their economic system is very interesting because they operate, or they were more as like a capitalist system, but it's still under the CCP, right? So I've been trying to catch up and learn about China because obviously they're a developed nation now. They're like a superpower. So, and they're not, afraid to say that they have a 100-year plan to become the world superpower and overtake, the United States. So, I mean, if they're going to be flat out saying it, like, I think we should at least look into that, and kind of keep eyes on it and not be so arrogant to think that, one day perhaps we may not be the world superpower, right? At least economically. So I think China's their system is something that, like, obviously I don't believe in communism, but like their system is interesting to see, like how do they keep this all together, and almost branching off their economy. But now they've been tightening the rope a little bit.
Yeah, you brought is funny quick story. It's like, growing up in Hawaii, you see how construction is in Hawaii, and then you go to like Taiwan and you see how quick they build like a road or a building, and then you come back to Hawaii, you're mad. You're like, why does it take so long? Why, like, they did this in like a day? Like, what the, what the hell, people? Why are we using asphalt? And I know actually why we're using asphalt a lot in Hawaii is because politics versus some of the newer cements, which is frustrating because I remember all the roads and the freeways and everything else. But
they're
that's
terrible.
a different story.
Yeah.
But that just showed, it's like, as a young kid, it's like growing up in Hawaii and then going to another country, and you see this country do something that took like 6 months and they did it in like a couple days. And you're like, yeah, you come back a little jaded.
Yeah, right. I mean, that's a perfect example. With Hawaii, everything is moving a little slower. I was just on the phone with Alex Camacho, and like we're talking about his plans and stuff, and in LA they crank them. it's fast, but he noticed one thing that he's learning is that it's so much slower in Hawaii, from just getting guys out and ordering materials, lead times, like, so it's really hard. You have to plan for that, ahead of time, and try to make moves to make it more efficient, your process. And there's a lot of moving pieces in flipping houses already, right? So it's hard to contain the beast, especially when people move at different paces, right? So if he's in LA, but also looking in Hawaii, so I want to see how he balances that, right? But this coming end of the year, there may be, it sounds like there might be some changes that might affect the housing market. So I would just suggest everybody just keep eyes open. I'll jump on calls, as much as you can to try to get information. The quicker you are to the information, like the more time you'll have to make some moves, right? And like in Hawaii, typically we lag behind markets like San Diego, a few months, like maybe 6 months or so. So if there are any leading indicators, to keep eyes out for the market that you're in, I'd say definitely stay on top of that. Like now more than ever, I feel we should all be pushing ourselves to be aware. Like that's why Steve and Matt, I appreciate you guys always coming on, giving us updates on what's going on with the interest rates and the money side, because he's right. Like, they know first, right? When you see the big dip like that, right, and the trends moving, like there's people that they get information faster than us, unfortunately. So by the time, the markets really move, they're out already. They're either in or they're out. They made their move already. And that's why the stock market, I'm not an expert, in trading or investing in the stock market, but I never liked it because it's just, we're at a disadvantage, right? We're always the last to know. I still think it might be good to diversify, but for me, like I love real estate. I believe in it. I live it every day. So that's where I'm gonna, build my wealth and my retirement, where it's in my control. And but we still have to keep eyes on what we feel may happen in these interesting times. So does anybody have any insight about housing prices going down or their market kind of stalling or seeing properties sit a little longer? I think we have a few realtors on the call. Or even if you guys are exiting properties and notice anything about, maybe it's going like maybe it's still going up, right? Like I know Richie just exited one. They got bid up quite a bit. So
yeah, I know that just being a realtor agent, we got the notice. The price is roughly 1.1 million for the median house here. But yeah, there has been kind of like that little stall where people are kind of curious about what you just said. Okay, is it going to go down? Or are we just taking a break because of this whole season? You got Thanksgiving, well, Halloween first, Thanksgiving, Christmas, and New Year's Eve. So just wondering if it's that too. So two of my friends wants to put their property on the market ASAP.
Yeah. I mean, that might be a smart move, if it's any time to sell, like probably now is the time, but, or try to refi or something. Well, maybe not now. Maybe we gotta wait till Steve says go, and then we can go.
Well, it's funny. I
your
was
rate.
just gonna say, yeah, we've noticed a lot. We like used to, if I use the local area, you'd have maybe like 3 listings, and it jumped to 25 in last month.
Oh wow.
So there's a lot of people that are like, hey, we want to take advantage of this boom before it crashes. But we're already, getting we had with the appraisal waiver dropping, like what we saw on our side. That's telling me the market's definitely gonna take a hit, or like when it comes to the sell side, like, so it's like people, we've had a lot of TBDs, people that have been approved and buying or, you know, trying to buy a property, they're now winning their bids. So it's not as hard as it was a few months ago. So personally, I think people miss the gun if you're trying to sell. On my side, that's here in Washington and like the up north area. I know Matt, he and I, you know, Matt handles the down south of Washington and we talk every day. It's very similar. So it's like we feel some of it's definitely, yeah, it's too late. There's too many listings out there now. So you don't have the price advantage if you're trying to sell property, or like if you're trying to flip something, do a quick flip.
Yeah.
You have to be really, really on your numbers right now if you're trying to do a quick flip.
Right. Yeah. And I was talking to Kiko earlier. He said he's seeing that the market's it's stalling and it looks like it's taking a turn. But I mean, like those markets in Seattle, what I've noticed, like it's kind of like a boom and bust. Like it goes up, it goes down, like, and it's quick, right? Like I think I said this before, but we had a couple of deals on Mercer Island, and man, I had like it was just a roller coaster of emotions going through that, man. Holy crap! And they said Mercer Island is expensive, right? So we have high interest,
right,
high dollar loans, and we're like, oh no, like, dude, this is not one of our
you
first
can't,
projects.
yeah, you can't play on that.
Yeah. And then by the time we're exiting, it's going back up already. So we're like, oh, okay, we're good.
Man, we need to like develop Whidbey. We need to do like a whole like Whidbey Island. We need like there's a lot of potential there. They have a lot of multi-million-dollar developments.
Yeah.
Like you have parts of Oak Harbor in Whidbey. They're like you have like sorry, this is way off topic of everything we're talking about. You literally have like single manufactured homes setups, but then you have like multi-million-dollar developments happening like a block away, and they got the, you know, they're doing the Safeway, Trader Joe's, they're doing the whole, you know, so you know those companies see what's going on, and some of the bigger developers see what's going on. There's I can see a lot of potential. Yeah, that would be one. Honestly, we should all talk about a little more on, because there's
and
when you see them doing that, you can buy, and then you can go and buy land for dirt cheap. People, you know, take anything they can. Yeah. Anyway, sorry.
Well, I think what I'd like to know too, or throw out there is anybody, the reason why I was asking earlier about getting somebody on from, like, you know, from one of the online platforms like Zillow, Redfin, or even like auction.com, is because like they have the data. And I have a few people who are looking to, you know, sell and upgrade into bigger investments, but obviously they want to put it into like appreciating markets, right? So we want to kind of follow where is the markets appreciating and where are they depreciating, you know, and where are people moving in, where's jobs moving in, where are they moving out? So is anybody have any ideas on what markets and even sub markets might be a good place for, you know, the next 10 to 30 years that they see as appreciate? Does anybody have any insights on Vegas or even like Washington State? Like, where do you in markets like Renton or Tacoma? Are they good long-term plays?
Oak Harbor, Lake Stevens, Matt plays better. Kent has the highest growth. They're going through the gentrification though. So that, I mean, if you're talking the 10-year time frame, yes, it's going to be a good development. Like they just redid their capital of the city, you can say. So it's like they're bringing in the newer restaurant, so it's going to look really well. You know, they're bringing in the higher end tech. people.
Mhm.
South is growing pretty rapidly too. Even south of Kent, Auburn,
Yeah.
Federal Way.
Tahali, was it Tahali?
Yeah,
Did I say it right?
It's like a
Tahali.
9,000 home sub community that they're building with shopping centers and everything. There's a lot of communities popping up down south. So truly buying Southern Washington is a good idea right now, just because once those communities go in, it's going to start increasing the prices surrounding them. But it's still a gamble by all means. It's still Washington prices too, which have been skyrocketing in the last year and a half.
Yeah, Tahali is like Hawaii Kai-ish
Okay.
environment. You know, they have their environment, their clique, their group.
Right.
Yeah.
Well-
The Oak Harbor one is probably more like Kailua. Like if you want like a little Kailua environment, they don't have the high school or they don't have the college, UH, but they have a military base, so you're guaranteed military income from a lot of people around. But I mean, they've been doing $1 million developments. Those are happening right now.
Okay.
I didn't think
Well-
it, but yeah.
I see Tim, you're in St. Louis, Missouri. Yeah? How's it going, Tim? What's going on over there? Are you starting to see things slow down over there?
Starting to see things slowing down. They're having some of the same problems we're having here in Hawaii. They're like order time for cabinets and a lot of things, they're slowing down. There's no stock apparently. I think it's a stem from when all the wood and construction prices went up. But the things are sitting on market a little bit longer than usual, and the prices are starting to level out. They're not skyrocketing like they were a couple months ago. But we just closed on a house. We're under contract on a house as of last week or Monday, this last Monday.
Oh, nice.
But that house sat with our wholesaler probably for like 2 or 3 weeks, which is pretty long for them. And so we got a pretty good deal, I think.
Yeah. Okay. So even on the investment side, you're starting to see like even the properties that would be bought with cash are kind of, it's not as competitive anymore. It's slowing down a little bit.
Slowing down definitely for people that are doing burr. For flips, it's a bit different, but we're doing burrs. So people that are doing burr, they're looking at their ARV and their refinance interest rates. And I think they're a little worried. They want to see what's going to happen.
Right.
And what our hard money lender is saying there is to lock in rates now because they're expecting them to go up.
Yeah. And what do you and you guys are doing that in St. Louis, right? The burr model. So
yeah.
Is that on the back end, are you guys already exited them already, or do you guys have any that are still going to be refinanced? And if so, like, are you having to deal with the rates kind of being volatile?
So we just refinanced our first 2 properties that we burred. We just started in January, so to put some scope on this. So we just finished our 2 first property refinances last week. We're using rate and term commercial rates. So we're at a 4.75. That's all built into our strategy, so we can afford it. The rent's paid for and everything. But we're seeing a 4.75, and I think it's probably going to go up, but we'll see. We're trying to build a relationship with the lender to see if they'll stay at that rate or go lower. But we'll see what happens.
Yeah. And what is the numbers looking like for you guys out in St. Louis? You buy for what, renovate for what, rent for what?
So this property that we just have under contract since Monday, we bought it for $83,500. The ARV is probably gonna be a 150. Probably put about $20,000 rehab into it. And it's lipstick. We're not doing any like tear down walls or anything, just flooring, paint, maybe a kitchen renovation, a bathroom renovation. Rents there, it'll probably rent at $1,200 a month. And so it'll pay the hard money lender for the holding costs, and when we do the refi, it'll pay for the mortgage, and we'll have a bunch of money in reserve. And
nice.
yeah, it works really well where we're buying.
Okay, St. Louis, Missouri. Hey, Tim, do you help facilitate 1031 exchanges at all, or?
I don't.
Okay. If anybody does know somebody good, Jerry, are you still looking for someone to help you with 1031?
No, I don't have to do it.
Good to go. Okay. Yeah. Okay, nice. Well, Jerry's looking to upgrade. He's ready to start buying something good, right? Maybe a multifamily or something. And maybe we gotta look over there with Tim
What
as well in St. Louis. Maybe you guys
I
gotta
have a
partner up on something.
I have a 1031 going on right now on one deal. What state is he interested in?
Are you Kansas City, Jerry?
Well, I'm not there now. The properties I have are in Memphis, but I was looking at the stuff that Coco has in Washington and Vegas.
Okay. Yep.
Okay,
Washington.
let me. I'll reach out to the agent that's going through this right now because yeah, they're doing it. They have a listing, and they're the listing agent. They're doing it 1031.
Okay.
So yeah,
Yeah.
I'll reach out. I'll send the agent info sent to you, Corey, and you can just cycle it.
Okay, yeah, that'd be good actually anyways. Sounds like Jerry's taken care of, but I'd like to have, conversation with them. And thanks Tim for sharing that one on in St. Louis. I wonder are they has St. Louis been an appreciating market, or is that kind of one of the flatline markets?
It's been appreciating. With the California diaspora, everyone is moving out to places like Houston and all these other spread out urban places. So Missouri has definitely been going up, but it's starting to level out a little bit, or at least it's just at a brief pause. We'll see in the next few weeks when all these rate issues and debt ceiling things get taken care of.
Yeah. Okay. Well, it's always interesting to hear what's going on in different markets, so I know we have people investing all over, and we're trying to help identify certain markets that make sense for portfolio buys for with appreciation. So strong cash flow markets with appreciating is what we're kind of keep looking at and scouting for. So if we locate one that we think is really good, above the rest, that maybe we might be getting in if we deploy at the bottom on the way up, then of course we're going to share it alongside everybody. And then maybe we all go and kick some door downs into a new market. That would be fun. Well, depending where that market is, maybe it'll be fun, maybe it wouldn't. But
I don't know if anybody on here is in Texas, but I was just talking to my niece who lives in Katy, Texas, and I guess that's right, like on the outskirts of Houston. And she's telling me that it's kind of a growing community.
yeah,
It's spreading out there. I was looking at homes, and you still got homes like under 200,000, stuff like that. So I don't know if anybody knows if that's going to be an appreciating market or not, but.
In Houston, from what I'm hearing, I have a lot of attorney friends. I'm an attorney if everyone's wondering how I have attorney friends, but I have a lot of people taking the bar in Texas because there's so many tech people moving to Texas. Everyone's moving to Houston. So there's a lot of stuff going in. I think I just seen a report that Tesla is going to go there as well. So a lot of people are going to Phoenix and Houston and Dallas.
yeah. A year ago, actually even three years ago, when I was in Austin, they were talking about how prices are inflated, all the tech companies are moving in, and they're still talking about it, and it's happening. So like back then, Austin, everyone felt, oh, Austin's in a bubble, like this is not looking good. But then more companies kept moving in. I asked my Uber driver last time I was I'm going to be in Austin next week, but last time I was in Austin last year, in fact, like I asked my Uber guy, and he's like, oh yeah, they're bringing 10,000 jobs, Tesla alone to, I don't know where they're at. Are they in Austin? They're setting up somewhere. But like that alone can change, a city. I mean, SpaceX is in Boca Chica, and not many people even knew about Boca Chica. It's like this small place in Texas, and now it's like, everybody knows about it. People are moving in. Everyone wants to see where Elon Musk's house is, his $50,000 house. And it's like, there's so much moving into Texas. And I feel because a lot of it has to do with, all the bureaucracy that some of these companies have to deal with, right? Moving out of California into Texas. So I think that's definitely a nice indicator for all of us, is to keep watch on that, because you might be able to get into a nice market and ride the wave kind of all the way to the top. So yeah, if anybody has markets they're keeping eyes on, like, I'd love to hear them, because we have clients, us ourselves, are looking, and then all our friends who are looking to move their money.
Can we have the guy previous, if he's is he Washington lawyer? Real
Tim,
estate?
no, he's Hawaii.
Tim?
Are you licensed in Washington, Tim?
I'm not licensed in Washington. I might in the future, possibly.
Okay, that ever happened, let me know.
What are you looking for?
Run into those situations, you know how it goes.
Yeah.
So cool.
Yeah. It's always
Small
good to have a good attorney friend.
Right. We all need, or we have those people. No, that's good. We're seeing a lot of people here in Washington move to Texas. So it's like everything you're saying, Corey, just, so how can we, our job.
Justin has a good point too. Justin, who, thanks for dropping in the chat, Just. He says, keep an eye out and look for major infrastructure projects, right? With the infrastructure that they're promising. And because that is a key indicator as well. Yep. And they have
Shop-ets, laundry, apartment buildings, storage facilities.
Yep.
Storage facilities is huge income.
Yeah. Yep.
And hospitals, hospitals who are building 2,000-3,000 square foot ambulatory surgery centers, and that stuff takes 5 years of planning and 4 years to build it. So, if you got 300,000 square feet of services going in, for hospital reasons, you got jobs, you got short-term stays with families, you got, high dollar incomes coming around there. So, those are great areas to this.
I love it. Yep. I think that's huge. Yeah, that alongside like the big box stores, watching like where are they putting the next Lowe's and Home Depot, right? Because they're not going to plop something there when there's no building that's planned for the future, right? So I think that would be a bad idea. And Shanti, thank you, Shanti. She's putting in the chat that Jerry or anybody else who has questions about going through a 1031, that they can reach out to her. Thank you, Shanti.
Okay.
Well, right on, guys. We're kind of right at 11. So hopefully everybody had a first good week of the last quarter of the year. And we can start lining things up, especially if you're flipping houses. Because when I was really heavy into flipping houses, like fourth quarter meant everything to me, because that set us up for next year, right? It kind of set us on pace for the next year. And even more so for us, even though we're kind of in both sides, like fourth quarter always gets me excited because I want to finish strong, right? So hopefully everyone had a great week. And if you guys have anything that comes up, feel free to reach out to me or in the Facebook group. Other than that, I hope you guys have a great weekend, and we'll see you next week. Aloha.
Appreciate it, Corey.
Thanks, Steve.